Hi, it's Larry Gaines from Power Cycle Trading, and this is my special holiday market update. But before I get started, I'd like to offer you a really nice holiday package, gift package, and this is your opportunity. If you do not have a Power Cycle Trading course, this is your opportunity to get 2 courses in this special, plus all these other additional benefits. So you can pick out your choice of any 2 Power Cycle Trading courses, the one on options, day trading, Etfs, the one on futures day trading, or the one on swing trading. And these are valued at over $1,500. You can also get, with this package, you get free the Option Trading Made Simple, Daily Market Power Outlook for 1 month, and the Virtual Trading Room for 1 month. And all this is special holiday price just for $597. So I'd like to offer that to you before I get started, and let me show you the link for that. Now, to take advantage of this, just go to powercycletrading.com/special and you'll get that link. But hope to see you at Power Cycle Trading, and let's get started. Now, one thing that we just developed and added to our toolbox is a scanner for volatility squeeze breakout trades. So we have this on display in our virtual trading room, but it's a very great scanner to pick out particular stocks or futures that have the potential to break out for based on momentum and based on a volatility squeeze. And we've got it broken down. We can break it down basically in any time frame, but we'll look at the 5-minute, 15, 30, 60, and daily. And here you can see on a 30-minute time frame, this shows the candidates. When you see a 1, that shows that they're in a squeeze for a 30-minute time frame, and this particular one can show you a list. We can list them all right here, so you can see ALTR all the way down to Google, Oracle, a lot of different ones. So that's on a 30-minute. We can break it down and do it on a 5-minute. Here's 5-minute. For 5-minute time frame, of course, the markets are closed, but this gives you an idea of the various stocks. These are the Nasdaq 100 stocks that are in a squeeze. I can do it here for 60-minute time frame, and you can see all the ones that are lined up here, and can go out to do it on a daily. So this is what we'll use for swing trades. We'll use the daily and a 60-minute, and you can see all the ones that are in a daily squeeze. Now here's a quick look at the futures. We can do it on the futures market as well, and these are particular futures contracts that are in a squeeze on a 60-minute time frame. So these are a volatility squeeze, and what happens is that when you get a squeeze, it's pressuring price in, volatility comes out, and then eventually it's like a spring. It's pressed in so far, and then all of a sudden it explodes to the outside and either breaks up or down. So this is a way that we can identify contracts that are in the squeeze based on different time frames. So here you can see S&P futures, Nasdaq, Dow, in a 1-hour squeeze. We can do that, for 5-minute time frame as well, 15-minute time frame, 30-minute time frame, and daily. So we can do it on any time frame basically with this scan. So now let's dive into the markets and see what they're looking like. Here's the S&P 500 cash. Really been cycling in this channel. You can see here's a trend line on the 60-minute time frame. This is what we'll use for swing trades. And here's the top of the channel, parallel channel. And it's just been cycling up, down, down, up. So currently our trading model has the market neutral position here on the 60-minute time frame, and we just came off the bottom of the channel and pushed a little bit to the upside into the close on Friday. Now here's on the daily time frame, medium term, same channel here, the upper boundary, the lower trend line, parallel channel. It's very tight cycle in here, just really cycling in this channel, and the market's holding up actually quite well. We had a down day on Friday, but the market came down to the bottom of the channel and popped back up. You're above all the major moving averages, and it held this 1425 level, which is a very key support level that needs to hold, and it's also towards the bottom of the channel. Our price cycle model is currently neutral, so it's just been bouncing up and down, up and down. Now this is an interesting chart. I like to take the price out and just look at the moving averages to get a little bit a better picture of direction. And you can see here all the moving averages now are almost pointed up. This is the 50 simple, which is still down, but here's your 200. It's sloped back to the upside. Here's your 100 day, it's up to the upside. Here's your 8 EMA, it's sloped and crossed through all the moving averages. Here's your 21, and it's crossing through the 100. So these are good indicators of price direction and momentum, and right now the price direction is still up. Now here's that same chart, but with price, and you can see all the moving averages in here, and price is currently above the moving averages. So we closed on Friday right at 1430, so it was above that 1425 level that I had pointed out in the earlier chart. And you have a trend line coming in here to the top, which is going to hold the market back a little bit on a resistance point. So actually this trend line, really doesn't come in until you get up to around 1450 in here. So taking that pivot high, extending it, and that's what you see. Now you also had the S&P 500 cash hold the 25% retracement, which was the first fib level of support on Friday. So it came right down and touched it almost exactly at 1422 and then bounced off of it. So, and this is with the fiscal cliff negotiations having stalled, gone to neutral. A lot of kind of negative things over the past 2 days, but the market's still holding up quite well. So if anything is resolved positive on the fiscal cliff, I think there's potential for some good initial upside rally, and then probably get sold into when you get up to this 1450, 1460 level, and then see what happens from there. But it's pretty solid as far as the move it's made, and with everything that's going on, the market's holding up actually quite well. Now here's the Nasdaq 100, the 60-minute time frame, intermediate term. This is what we use for swing trades, and we use multiple time frames. So we'll look at the 60 time frame along with the daily to determine swing trades based on our model, and then we'll use the scanner that we showed you, I laid out to look at various setups. It'll scan whatever we're looking at for volatility squeeze type plays or cycle lows. And right now the model, you can see it was short on the 20th at 1900 hours at 7 p.m. Central, and then it flipped actually back to the long side at 0500 Central on the 21st on Friday, and it's currently still holding long. We're into this little bit of a resistance here at 2666, and that also comes into the it's going to close right above the 200-day moving average, which was 2660. So currently in an uptrend on the intermediate term time frame for the NQ, which is the Nasdaq 100. Here's the Nasdaq 100 with just the moving averages. It's not quite as strong. When you looked at the S&P 500, those moving averages were really sloped up and strong to the upside. This is not quite as strong. It's being weighed down a little bit more so by Apple, but you can see the moving averages are sloping up, but not as strong, you can see from the momentum standpoint of the moving averages as we saw from the S&P futures. This is a medium-term time frame for the Nasdaq 100 futures as measured by the daily. You can see how whippy it's been, and this is again why we use multiple time frames for trades and not relying on just one. Because we'll have confirmation by another time frame, and we'll use multiple to confirm something rather than one, because you can get out of sync with certain time frames, and you can get whipped around quite a bit. So you can see on the medium term time frame, the daily, with the Nasdaq, it's been very whippy. Based on the model, it's been up, in, out, so very choppy nose set direction. You can see the sideways pattern that it's been in for since the end of November, right here, November 29th through almost good portion of almost all of December. So very, very sideways, whippy type market action. And the current model is neutral right now based on the closing price on the 21st, which was Friday. Now here's a shot of Apple. This is the 5-minute time frame, which we'll use for our intraday execution and also help us for swing trade entries. But you can see this is what I was talking about earlier on that scanner. This is a volatility squeeze. You can see how price squeezes in. And so we can scan for this based on our trading model. And then we can, based on the trading model, get a trade set up based on when it breaks out. So you can see here that price, on Apple just was in this band from, a high of around 515 to a low of around 514, about $10 range, just chopping sideways, and then broke out towards the end of the day right around 2:30 and had a great move into the close. So this is a volatility squeeze, breakout trade setup, and if you'd had our scanner, you would have been notified of this, and you could have taken the trade if you're looking for trade ideas on a squeeze. So that's just a good example there on the 5-minute. Here's Apple on the intermediate term time frame. Our trading model was short Apple on the at 1400, 2 o'clock Central on the 19th, and it pretty much held short. And then right towards the end of the day, it just was bouncing sideways all day on Friday, so the system went neutral, currently neutral. So Apple popped to the upside. We'll probably see a little bit of fall through perhaps Monday, but it really needed to get back over this 530 area in here, and then get back over 550. But it did hold, and it did not get back down to the 505, so that's very positive. So you might see some stability here and see it start trying to push to the upside a little bit. So we'll see what happens Monday. Also, it's going to be a short day. Here's Apple on the medium-term time frame as measured by the daily, still holding neutral. That was on the 18th of December, went neutral. So you can see the price action has been pretty sideways if you look at it. 1230 up to the upside, and then it's been really kind of 508. No breakout. Here's a trend line. No breakout to the bottom, no breakout to the upside, but starting to funnel in. You're going to get a pennant formation, so it's going to squeeze it into either a break to the upside or downside very soon. Now our trading model still has Apple on a long-term trend down, so it went down to, on the week ending the 14th of December, it based on the close, hard close down, it went to a short or downtrend on the long-term weekly, and still holding that. So closed right at that trend line. So really still on the edge of either breaking down lower, or we'll see if it holds here and can move higher. So best of luck trading Monday, and happy holidays, and I will speak with you very soon. Good luck trading on Monday.